The dollar Swiss for the week of October 19. The plan last week was to go long the dollar Swiss if it traded above the 102.49. We did do that. We did trade above the 102.49. We put a high during the week of 103.50, only to reverse and decline, going back above below our selling point, which is the 102.49, and we sold off and we made the low of the week of 101.16, and we closed at 101.80. So this is still bearish. We have no buy signals on the dollar Swiss. We will keep our buying point of 102.49 on the dollar Swiss as is. We will not going to change it, and our structure point remains the 103.71. So for the time being, as I said, there is no change as far as the dollar Swiss, and we are maintaining our short bias on it, and technically we are short the dollar Swiss from below 102.49. It is still our buying point to go long above the 102.49. This is our daily chart. We really don't have any real buy signals, but as I said, based on the weekly, we have our buying point below 102.49. But I think we can make an earlier entry right now by taking this momentum low of 102.15. So we can have now our buying point as 102.15. This will be our new buying point now because of how the structure of the chart has set up. So this is 101. I'm sorry, the actual number is not 101.15, is 101.18. So the number is going to be 1.018. That will be now our buying point. We are pretty much close to it right now for the close of the week. We have closed on the daily chart at 101.80, so our buy is 101.86, so which is pretty close, and that might give us a short covering rally to the 103.71 level, which is now the new structure point. So this is now our structure point, and if we trade above the 101.86, that is going to be our buy signal, and we are going to look for an initial target of 103.71. And if we do trade above the 103.71, then we should be looking for a major short covering rally all the way up to the 105.90. So now I'm going to go to the radar screen and I'm going to enter our buying point. So our long point is going to be 101.86. And I'm going to go to our intraday chart, and I'm going to enter our line so that we know where we are going to be a buyer. That is actually, that's good, 101.86. That is going to be our buying point. So if the dollar on the intraday goes above the 101.86, that will be our buying point. If you look at the intraday chart, we have been declining all the way down. We had one push on Friday, and at the end of the session, after the New York session, we have closed below the range, which is a negative setup, and we should be looking for a further decline. If you look at this chart again, you would see that the major trend on the intraday is all the way to the downside. We had one push which is the short covering rally that came in towards the end of the day, but we still need another push over here to the low before we can say that the market has a tendency to change its bias and start going to the upside. So I will be selective as far as the dollar Swiss, because we see that there is some slight short covering coming into the dollar. So in the Tokyo session, I will be looking to take a buy on the dollar Swiss on a trade above the 101.86, and if the Tokyo session opens somewhere around here, which it should based on that decline, then I can take a short coming out of the range, looking for a test of the 102, 101.27 low or somewhere around here. Now I will be initiating the buy on the second break to the upside. I will not be taking the first break out of the range as long as it is below the 101.86. But if I have a second break above the 101.86, or actually above the momentum high of 101.95, that would be our buy. So I think we need to be rather patient with the dollar Swiss, because the Swiss is fairly strong right now, and we do not have any, based on this, any trend change or any structural point that we can identify as a turning point to the upside. The only one that may have a potential is this momentum high, which is the 101.95. If we do trade above the 101.95, that might give us, as I said, the lead to break to the upside. But as long as we're below the 101.95 or the 101.86, and keep in mind between 86 and 95 you're looking at 9 pips difference, so you have an area between the 101.86 and the 101.95. There is also another zone which is the 101.92. So you have multiple area, a very serious resistance area around here in this area between the 118 and the 101.95. So if we do break that, then that would be a good buying point. So I suggest that we be patient and actually change our buying point to the 101.95. So I'm going to change that instead of 86 so that we can be a little bit patient, and I will take it above the 95 just to be on the safe side. Our short, we are already short below that point, so we can maintain our short bias on the dollar Swiss.